need to be intensely aware of the customer and be madly in love with the problem. As a founder or even a product manager, if you're not in love with the problem, it becomes a job and it becomes a boring thing to do. You're just doing it because you got to do it. And that's when the company and the product will die. So when you're madly in love with the problem, then you're attached to the customer pain and intensely aware of it. And that's what makes it successful, whether you're in a big company or a small startup.
Hey everyone, welcome back to the Ignite podcast. Today we're thrilled to have Mala Ramakrishnan, founder and managing partner of Progressive Ventures. She has over 2 decades of experience as a technologist, entrepreneur, and now a VC. Mala brings an extraordinary depth of insight to B2B AI SaaS. She's a 3-time founder with multiple exits, a former head of privacy at WhatsApp, I've heard of those guys, and a Stanford-trained computer scientist. Through her firm, Progressive Ventures, and community platform Founders Creative, she's creating a more inclusive and impactful AI ecosystem. Let's dive into her journey, her investment lens, and the future she sees for enterprise AI. Welcome to the program.
Thank you, Brian. It's great to be here. Thanks for hosting me.
Yeah, thanks for coming on. So you founded your first company at 21 while still in grad school. What drew you into entrepreneurship so early?
It's quite a funny story that I made a couple of friends, much like you, born and raised in the United States, entrepreneurial, who just kind of included me in their circle saying, hey, you seem to be good at writing. Why don't you join us? There's a business plan contest and let's write this plan together, which won the first place with Guy Kawasaki from Garage Technology Ventures. And it was quite a stark contrast because I come from a background where none of the women were allowed to work. And I took a $50,000 student loan to come to Stanford University for graduate studies. And the first place that we won was $50,000 cash award. So here I was, stark contrast of a loan of $50K to get into the country. And somebody called a venture capitalist. I'd never met anyone of that title before. Gave me a $50,000 check. We raised funding soon after, rented office space in Mountain View. I was a co-founder and CTO, and we built an ITSM product before we knew what ITSM is, which is automation of service ticketing on Motorola handhelds, and eventually sold the company to BMC. So we exit by sale.
Wow, that's amazing.
Yeah, I mean, it's
so early too.
Yeah, the friendship drove me much more than, wanting to be anybody. And that's kind of how I have been, I think, all through the people and connections and network take me along, and I'm super grateful for that.
That's amazing. So what did you do after, did they give you the golden handcuffs? You had to stick around at the company for a while, and then you ended up at a bunch of big tech after that. Like, what kind of walk us through that journey?
It's funny, when I was the founder and I was just really intimidated, and I thought that I needed to go and train and be an engineer first and work for someone. You think you're not good enough, right?
Imposter syndrome.
Imposter syndrome. Yeah, it was a bit of imposter syndrome that I thought.
Right.
I kind of, got lucky and probably need to go train to be a better engineer. So I went and worked as a software engineer for 7 years for a number of startups before I hit big tech. I worked in companies that were funded by Sequoia and Benchmark, Kleiner Perkins, small startups. I used to be like 25th or 30th employee. And then I realized that I'm really good with pre-sales, and written skills come well to me, written communication and spoken skills. So I moved into product marketing, which is where all the women were, so I could have more friends at work.
Yeah. That is, my wife is in product marketing for forever. I was like, hey, how's your diversity over there in product marketing?
Yeah,
it's all 30-year-old white women.
It's so much fun. I really enjoy it. It's just that I didn't realize you have to get to be CMO someday and drive demand generation, or you're going to be stuck in product marketing, right?
Yeah.
And I'm technical enough. I still write code. That's how geeky I am. So I just transitioned back into product management, started my second company, exit that one, and then third company. I just exited my third company in December last year.
Wow, that's amazing. So what was the second company and what was the third company?
So my background is in middleware technologies. I was one of the architects who built the Beeple engine, which is it's a middleware component that helps you automate workflows at a company called BEA, which got acquired by Oracle for the Fusion middleware stack. And so then BPM and workflow orchestration transitioned to become robotic process automation. And so that's kind of my background. And so my second company, Stanford Research Institute's venture arm, actually the venture capitalist there contacted me and asked me to join him as an EIR. And that's how it started, second company, Mavantis. So it was basically a robotic process automation engine focused on automating the order to cash process, but very specifically using RPA so that you don't have to migrate your business processes. And I had to exit the company. For one thing, the pandemic hit us, making it really hard to sell because majority of the people we were replacing, which through the automation are in countries like India. Without visiting those countries, it's really hard to build a product. And more importantly, I'd made a mistake that I picked a problem that was kind of like a snowflake in every organization. And so there wasn't a repeatable product model. And I didn't know that because I'm not a finance person. And I was more a middleware and a techie who was trying to find a problem to solve. It was a good experience. I learned a lot. I raised some money. I got some early adopters, customers. And yeah, I basically sold the team and exited.
Yeah, that's amazing. So what do you do after that?
Well, I needed a break, so I went and had privacy at WhatsApp at Meta, which is hardly a break. I
Back
thought
to
it
big tech.
I know. I thought it'd be free lunch because I live in Palo Alto, right between Google and Facebook. It was phenomenal. It's the only company or any only product I worked on which is B2C. And so working on a problem which is, such a massive scale where I was basically the signature authority for privacy on WhatsApp. It was a pretty elevated role with a lot of indirect reports and a lot of politics, regulatory laws, compliance. So I really learned the GDPR and the value of consumer rights and how a massive organization like that operates. I don't think I'm cut for companies that are that large because
Yeah.
I didn't last very long. Yeah. And then I had to start my other company. I think my sweet spot is starting my own thing. And I'm just very comfortable with that. Perhaps because of that first experience where I got to start my own company.
Yeah. So speaking of, I mean, you've had multiple successful exits. What's the thing that never changes about building a great product, regardless of stage?
You need to be intensely aware of the customer and be madly in love with the problem. As a founder or even a product manager, if you're not in love with the problem, it becomes a job and it becomes a boring thing to do. You're just doing it because you got to do it. And that's when the company and the product will die. So when you're madly in love with the problem, then you're attached to the customer pain and intensely aware of it. And that's what makes it successful, whether you're in a big company or a small startup.
Amazing. And so you're at, Meta, a huge company, dealing with the Game of Thrones is what I call it. You're starting to think about, okay, do I go do another startup? Or maybe I'll be a VC. Like, walk us through that decision-making process because you've been such a prolific founder with multiple exits.
Yeah, I'm in my 40s now. I just don't think I have a lot of time left. A couple of decades maybe, right, of my working career. And it's
I
about
mean, we all got to start playing pickleball in our 60s.
yeah. Yeah, well, with longevity maybe we could start in our 60s now, but I feel like 40s is kind of like, the culmination and you have to do something and leave a legacy if you
Right.
want to do something of that sort. And if not everyone has to. But for me, I feel like I'm in a very privileged position. I come from a background where none of the women work. Just imagine that. My mom was not allowed to go to college. She went on a hunger strike to go to college. And I landed at Stanford University. And I started 3 companies and sold it thanks to my unique position of landing in the Bay Area. It's just, everything coming together, people always there to support me. And so, what does it take for me to take the next generation forward? What do I want to leave behind? If my mom brought me this far, what am I going to do for the next set of people? And I don't have daughters. So then it's in community service in some ways. And it doesn't make sense to think of just community service because women need to be in a position of power for the world to change. And for that, you need to be with money. And so when I look back on the last 40 years that I've worked, or 20, 25 years that I've worked, and for 40 plus years that I've existed on the planet, Sergey Brin and Larry Page, the founders of Google, were with me at Stanford as graduate students. I took their class. Facebook didn't exist. My operating systems prof went and started VMware. So it was a very different world. And just in the last couple of decades, look what's happened. And why has it happened? Like every industry has been transformed because of technology. And the force behind that is venture capital. Venture capital gets to decide which founder gets funded, which technology gets funded, which industry gets funded, everything, right? And
I think you're
eventually,
giving VCs too much credit.
no, I think that Mark Zuckerberg and Larry Page and Sergey Brin, all these guys would not have become who they are without venture money.
I don't know. I don't know if I agree with that, actually. I feel like Mark Zuckerberg's Facebook would have been successful. I mean, he definitely, you're right. He has to raise capital, but those guys were fighting to get on that cap table, right? He showed up in his pajamas,
It's,
right?
it's it's true, right? But without that money, he would not have been able to drive.
Right,
And I know a lot of women who show up in their pajamas for cash with brilliant ideas who don't get that cash.
right.
And I've
Yeah.
been one of
Double
those.
standard.
It's a double standard. And
Yeah.
so I think I'm in a unique position that I can understand technology. I know what it's like to be a woman, and I want to empower these people to go IPO on Wall Street. I didn't go IPO on Wall Street. I didn't build that kind of wealth. There's just so much stats to it. If you just read about it, it's only because of my background that I'm always reading the disadvantages that people have and the advantages that I have. If you see the birth weight of your infant goes up, if the mother's gone to college and she's not even met this newborn, and this is not correlation, it's causation, right? It's an experiment that was conducted. And so just imagine if your mother had gone IPO on Wall Street. It would be a very different world. The politics that we live in today, where we have Donald Trump and Elon Musk driving things at the level of the United States, would be very different if there were women in seats of power, where we have the kind of wealth that they do. And that's what needs to happen. And if it's only that I stood up and I said, I can be a venture capitalist too, maybe there'll be someone who comes beyond me,
Yeah.
beyond my time, who could make it bigger than me. But they at least saw me stand up. And if that's the least I've done, it's worth it. And
And
that's
you know
kind of,
what's funny about all this too, as both of us have gone out and raised money. How many of your LPs are women? I'm curious.
it is insanely hard to get women to write checks.
Right. What is that?
It is also very hard to get women to start companies
Yeah.
and to step up and lead. Because I'll tell you, as late as the 90s, women could not open bank accounts without a male co signer. So we are scared. We just don't have role models. And we're afraid to let go of what we know. And we're afraid the children will suffer if we step up and lead. And I was that way. I didn't step up to be VP almost my entire career because I thought my children would struggle if I was just trying to be somebody more important.
My wife literally is on a permanent sabbatical from her, she ran product marketing at LinkedIn. She ran the $13 billion product line, had a bunch of people, had a big org. And she's just like, hey man, these kids are not getting any younger. I think I'm just gonna,
That's exactly it. I
you
took
know,
3 years myself off in the middle and I did some services contracts because the babies were newborns. I
yep.
have to say, my husband is super supportive, right? And you know him. I'm just really lucky. It's like if I wanted to run a yoga studio, he'd be like, you can do it. You're awesome. If I wanted to run a venture capital firm, he'd be like, you can do it. You're awesome. And that's what I need. And again, I'm telling you, it's a privilege. Not all women have that. Women and their
Yeah.
fathers get divorced. It's just so common. So I need to do something to change it. And it has to start with me. I can't keep saying women are not writing big checks, women are not starting companies, we've been victimized. All that I can do is say, I can see all these trends. What I can do is start with me and step up and lead. And I call it the 3 mile circle of influence. I do everything within a 3 mile radius of my house, which basically means if I understand the technology, I solve it or I invest in it. If it's a drive away within 3 miles, when the kids come home, I'm here, I will do it. And luckily, I live in Palo Alto and I'm in a place of privilege. So my 3 mile radius is highly impactful. It's like venture capitalists living down the road, founders living around the road, people of wealth live here, right? It's a safe community that's super supportive. And Stanford University is just down the road for me if I want to tap in on researchers and PhDs in house there. So that's what I'm doing. I'm starting a venture capital firm while raising 2 teenagers out of my home office. I've raised sufficient money in order to write checks for women. And I'm going to keep with this for the next few decades. And I have an amazing team of men, of course, who will team up with me, who I'm empowering to carry this forth. And I tell you, men are supporters. They are our biggest supporters because they've had wives, just like you're saying. They have daughters, they have sisters, mothers. They know this pain. Across the globe, we've been left behind. Across every culture, women have been held behind. I don't know a single man who would say, I can't help you. If I go and tell him, hey, help me understand this better or give me leverage, get me into a room I don't have access to. And that's basically all I need. And so, yeah, so that's basically what I'm doing. I'm like, this is the most important position that I can fulfill at this point in my career with all the skills that I have, where I'm going to help women start companies. Anybody, actually, underrepresented people, men, anyone start companies, but with the focus of women. I'm going to write checks for anybody, especially women, so that over a period of time, my mission is I'm going to take a woman IPO on Wall Street every single year, which is not a solo act, right? I'm going to have a team of venture capitalists who are going to partner well with me. I'm going to have mentors for my founders. I'm going to have customers buying from them. So it's an ecosystem I need to build around it, and it has to carry on beyond my time. So it's a movement, which is what I'm building.
That's really cool. So walk us through, some intricacies of that thesis. I like the vision. I think that's amazing. You're focusing on B2B AI. What are some non-obvious insights founders are missing when building in this category?
Yeah, so you're referring specifically to the fun thesis at this point, but really, what I just told you as a vision and a mission is my life and the life of anything that I do at this point, which is Founders Creative, which is a nonprofit organization I've created because there's so much more that needs to happen beyond venture capital. And then in venture capital itself, where we write the checks. And if you think of just B2B, it's the focus right now because that's my background, but it's not like we'll focus only on B2C always. The reason why I do B2B is because I've had 20 years experience as an operator, shipping and scaling B2B products as an engineer, product manager, marketer, and of
And a
course,
founder. Yeah.
I'm founder, right? So just the growth metrics are very different when you're analyzing B2B products. It's also the case that B2B brings you massive revenues, unlike B2C. And B2C companies are much more user driven, as in growth driven, and users are, very unreliable. It's hard to predict user behavior and churn. And so, as an emerging fund manager, it makes sense to focus on B2B, but also as founders, especially if you don't have an eye for design, which most of us don't, it can be developed, but not as a founder on the fly. When you're building a company, they're like trying to build your design skills, right? And so, yeah, I think B2B is a good place to start. Now, B2B does bring its own challenges. You need to have early adopters in order for you to be able to build your product. And most of them are not accessible in the Bay Area. Most of your customers are going to be outside. So you need to be willing to get out and travel and network and build relationships and bring them into you. So it has to be a compelling solution.
Yeah, I love that. So walk us through your decision-making process when you're evaluating these early stage companies.
Sure. Yeah. So we do look for B2B companies, SaaS first, AI first companies. I used to teach artificial intelligence in 1999 at Stanford. That's how old I am, but also that's how much of AI I have looked at, right? So that I pick things that come easy to me, which are still highly valuable for the world. So B2B SaaS, AI first companies, we look for at least one underrepresented founder. Underrepresented is a wider range than women, but we want to be able to deploy capital. There just aren't enough women who would meet our thesis. We do look for growth metrics as in revenues. I like to see $200,000 in revenues for a seed stage company, at least. $1 million makes me feel even better because there's enough of a pattern there that I can recognize. We like seasoned founders, second, third time founders. We also look for what your data management practices are. I'm very passionate about consumer data rights. So I'm always trying to see, and it'll set you apart if you're thinking about privacy and security up front, so that as you scale as a B2B business, you can actually make the cut. So those are some of the things we're looking for. We like to see companies come out of top accelerators as long as you're not too overpriced. Yeah.
Yeah, they tend to be if they're good accelerators. How does being a product first investor influence your conversations when you're talking with technical founding teams?
Yeah, well, I think the founding teams find a lot of value in the conversations because we go pretty deep on the tech. We bring a lot of value in terms of customer connections that I can already provide for a number of our founders. And I am honestly still learning the ropes of figuring out the business model by just one conversation, which is usually all I get sometimes with these founders, and trying to figure out, how do we get at least a solid return on the fund with this one company. So what's my leverage such an early stage? It isn't much of a leverage we get in the negotiations. But those are some of the challenges that we have. Yeah.
Let's talk about founders creative and community building because we do something similar here. So we could trade notes. It seems like a fascinating initiative. How do you see the community intersecting with deal flow and supporting your founders?
Oh, it's been phenomenal. We have more than 10,000 investors, founders, and executives all in Silicon Valley. And the founders really benefit because when they get on our stage, they get their lead investor, they get their customers, they're able to hire their C-levels. We elevate their profile. One of our portfolio companies creates amazing studio quality videos on your iPhone, filling a gap in one of the top marketing suites at Adobe. And so you're able to amplify yourself as a founder. We do that for executives and investors as well. And I'd love to feature you, Brian.
Yeah, that'd be great. Yeah, let's do it.
Yeah. But that's basically what we do. Founders get elevated. We also run an accelerator through Founders Creative, which is a zero equity. It's run by, I don't run it myself. It's run by volunteers. And that gives you an opportunity to start your company, especially if you've never done it before. And it's low stakes because you can hold your job while you're doing it until we get you to customer traction. So I'm all about sell first, then build, and then go and raise. Because as a founder, that's what I saw work for me. And I think that's how B2B companies should be built. And so a pitch deck,
I think that's really important. Can you repeat that?
you first go and sell.
Sell, yeah.
Sell your vision and you sell your idea. Make sure you sell the product and then you go build it. And then you go raise money. And that way you're de-risking it for your investors, but also for yourself. And you can sell it while you're already doing your day.
And I see founders do the opposite, right? They're trying to go raise money off a pitch deck. They haven't built anything and they haven't sold anything.
Yeah.
They're like, well, and I'm like, well, you haven't built anything. You're B2B software first off, right? And you want me to invest in like an idea? And they're like, yeah, I thought you were a pre-seed investor. Maybe you could talk about like why pre-seed is actually post-launch now. I think it used to mean like Pre-launch.
Pre-launch,
Yeah,
right?
but now it definitely means post-launch.
I don't even do pre-seed. I just do it only because I don't think I'm ready for it as an investor for that level of risk, honestly. And I have good deal access for seed stage companies because I'm a seasoned founder myself. So I basically invest in friends through the StartX community, right? Through people who are starting companies who I've worked with previously at the VP level or C level. And that de-risks it. And they know the value of what I'm talking about, right? So they usually come in not with a pitch deck, but with a full-blown product and customers in production. And I'm talking like, Google in production or, 1 million, 2 million in ARR, one of the companies I know to check for. I just wish I was a bigger fund for some of these.
Yeah, that's always the limiting factor is capital. And that's why you see VC firms, I think, get really big, is there's always more amazing startups to invest in, right? And you're just limited by time and money, basically. Now, before we continue, a quick word about an incredible resource for startup founders. This episode of the Ignite podcast is brought to you by Build, spelled BYLDD. So what is Build? Well, they specialize with early stage startups, especially non-technical founders and teams, helping you build and launch scalable revenue generating software fast and affordably. Most startups can't afford to drop 100K on some big design engineering agency. Freelancers are risky, inconsistent, and full of project management headaches. For 10K in about a month, they can turn your validated idea into a real market ready product. It's built for scalability. Past clients have been accepted into YC, Y Combinator, very impressive, received backing from Google, and raised multi million dollar rounds. And there's an exclusive offer for Ignite listeners. Get a free UI UX design sprint that's 3 to 4 weeks, a deep dive into your product experience, delivered completely free. This is normally a $10,000 plus service. So head to byldd.com, connect with the Ayush team, mention the Ignite podcast. Let's get back to it. So broader reflections, what's your take on the recent explosion in AI tooling versus like deep dive infra plays? Are we hitting saturation or just beginning?
Oh, I think we're just beginning. It's a super exciting time. It's just an incredible time to be alive on the planet at this point. I just think it's so easy to start a company, even with just the cloud services. I was so excited. But this is a whole new ball game. I mean, if you just play with Copilot and Perplexity trying to generate code, like I'm writing machine learning code just for the joy of it, and teaching my 16-year-old and 13-year-old how to do it, which is so easy for someone like me who's really I've sat it out of engineering for so long. So just then imagine how that lowers the price of building product. And so the opportunity is immense, but then also the differentiation is very different at this point. It used to be that you have a tech differentiation and a patents file, which is not going to hold water anymore, I think. So then your differentiation has to be the access to customers, access to data, the speed of execution, right? How deeply do you know the customer pain and the problem? Are you like an industry veteran? So a lot more verticalization. And so those are some of the things that I'm looking for. But it's a super exciting time. And I don't think we're done because I think, just imagine now you can drive around without a driver. That used to be like a haunted, scary horror movie, right? And it's just phenomenal what else could happen with augmented human intelligence coming through AI.
Yeah, the cognification of our society with AI. I want to touch on privacy too, because you got kind of deep there at WhatsApp. How should founders think about privacy when building AI products?
Oh, they should be thinking privacy first, or I think they're going to be dead. Because when you start a company, it's basically a project. And until you go into production with the customer, in which case you're going to, scramble around and get GDPR and SOC compliance. And you're going to try and get the cheapest vendor and do it. But then you're going to reach a point, hopefully, if you're going to go IPO someday, that there's going to be scale and people will actually care about how their data is managed. And at that point, I think the GDPR is the low bar on privacy. Most laws are, right? Legal is usually there to protect you in the worst case. They want to make sure you don't go
Yeah, it's
behind.
a backstop. It's not
It's
shouldn't be your end goal.
it is not your end goal. It's the low bar on what is right for human beings. And it cannot be that a law determines what is right for human beings across the globe. And so the different laws in different parts of the globe, different regulations. Of course, the GDPR is the high bar when it comes to all those regulations. But even then, there are countries that are not, that don't have a regulatory body at all. Right? And even if they did, you'll reach a point where the conversion, as in the currency conversion, will be that the United States dollar outwins any other, that you could still violate rights and just pay off the fine because the fine is so low. So then the question becomes, what is your integrity as a founder? And that's going to determine what's the integrity of your product and how you're going to protect human beings on the planet. So from day zero, you need to think about what is my high bar when it comes to protecting my consumers and protecting my users of my product. Because then we can tell you whether you're going to actually make a break into JP Morgan Chase and one of the financial institutions. Because if you really think about it, most financial processes are not on public cloud even, let alone using AI from a startup. So the higher your bar, the greater the chance that you can go after the big guys. And this is important because if you look at B2B companies that go IPO, and this just comes from the experience of working in so many companies, I'd say easily 50% of their sales will be to financial institutions, because that's where most of the money lies. And so that should be where your eyes are. If you're a B2B founder, you want to have a high bar on integrity, high bar on trust and privacy, security from day zero. It's built into your product in terms of the processes, in terms of your management practices. And that way you can actually go after the larger vendors and win.
So let's wrap up with a rapid fire, which isn't very rapid, actually. We'll probably have a long discussion here, but what's a B2B AI trend you're most bullish on right now?
B2B AI trend. I'm the thing that I'm most bullish on right now is how we can automate developers' jobs. I just think you can ship product like nobody's business, and that's super exciting.
Yeah, and it's not just developers; it's everybody. All knowledge work just feels like it's getting accelerated. And I used to employ MBA interns. That was the way I scaled my time. So I'd have them dig through due diligence and check everything, and I would check their work, but it made me like maybe 2x more efficient. But
Mhm.
now with like O3, I'm probably 3x more efficient. Just dump
Yeah.
everything in there and just have a conversation with the AI. What's your favorite underrated founder trait that signals long-term success?
I think the most underrated is persistence, is that usually you can't see unless the person has been through some trials, which comes with age, or they're able to express it clearly, articulate it clearly. It could be that they picked a domain that is really tough to work in, and they stuck it out as even a low level employee long enough to understand the pain and problem. And we have a couple of those that we wrote checks for. They're pretty young, but they have worked in industries which are not awfully interesting, and they've just endured and learned the pain and problem, that now they have come out saying, there's a better way to do it. And they built a solution. And I love seeing that. So I think it's persistence in a boring area
Hmm.
to learn something. Yeah.
Yeah, I love that. What's the most overused buzzword in AI pitches today?
I think it's automation, right? We're going to automate everything all the time using GPT.
What's one red flag in a startup you would instantly pass on?
If the founder doesn't have customers or early adopters, I pass. Yeah. If they just don't know the pain of the customer, doesn't everything else can fall in place. If you don't have the tech, you don't have your pitch deck, you don't even know how to fundraise, totally fine. But if you don't know the customer pain enough to go and get a couple of early adopters before you come and talk to a venture capitalist, it's a hard pass.
Love that. What's an early stage metric you obsess over that others ignore?
A metric that I obsess over that others ignore. That I think it might be this one because my team pulls me up on it, which is gross margin. Everyone gets free credits, AWS credits, OpenAI credits, and they come to you saying, "Okay, now I have $200,000 in revenues." I'm like, "Okay, what happens when you run out of your credits?" So I obsess over gross margin, trying to find out exactly how much money is your customer paying you and what value are they getting, which basically means you're either replacing somebody. It's either a resource as in a human being or a license, or you're helping them generate revenues, which is much harder to do, to
Hmm.
justify it at least. And so that's the obsession that I have in B2B. Yeah. I don't know if everybody does it.
Yeah, it's something we look at. And I think the distinction is important, which is, are you including your credits currently in the gross margin? If you were fully paying for your, S3, EC2, whatever it is, your H100 time on that, what is the gross margin on the margin after you run out of credits?
Yeah.
I think
And
that's,
basically what happens if you turn your whole AI off, right? I think AI is going to be like spreadsheets. And it's important that you be AI first, but that shouldn't be the reason you exist. And so that's
yeah,
what
I love that analogy. It's similar to an analogy I like to use with people, which is like saying I'm AI first is like saying I'm database first in the 80s or
yeah.
internet first in the 90s. It's kind of like a cliche almost.
Yeah.
I led AI at AWS. I could have done an AI fund. For the most part, I do. I invest in a ton of AI. But I also know that, some companies are kind of boring when you look at them. They're not using AI at all. Like some are just like straight vertical SaaS companies that will dominate and become billion-dollar unicorns. And yeah, they use AI, but it's not like central to how
Yeah.
they deliver value. It's a cherry on the top of,
Yeah.
of, of a beautiful SaaS business.
Yeah, and I think if you don't have AI, then you're going to be at a disadvantage too. So
Right.
that's what I mean when I say AI
It's like
first.
table stakes. Like, are you using relational databases in the 80s? Yeah, of course.
Yeah.
Are you using mobile in the 2010s? Yeah, and cloud? Yeah, of course.
But is that the reason you exist?
Yeah, is it your end all be all for existence? Yeah, exactly. Unless you're like a platform company or something like that. I am building an agentic monitoring framework for agentic workflow analytics. Oh, okay. Well, that's interesting. That is core to what you do. Speaking of, what's the most promising company you've backed recently?
Well, there's
And
so
why
many.
didn't you send it to me? No, I'm joking.
I think you backed this one. A0 Dev, I love those
Oh
guys.
yeah, A0. We both backed that one. Yeah, that's a good one out of YC.
Out of YC.
Yeah,
Two African Americans. They had 54,000 users on their
ton of
platform.
users, ton of traction. Basically, like a Lovable for mobile development,
Exactly.
mobile app development. Yeah.
And I could go to their website and build an app within a few minutes.
You just start talking to it. Hey, I want a children's book, and we did this for my wife's children's book series.
Oh,
I gave them the artwork. We did it like on the fly within 5 or 10 minutes. It was pretty breathtaking. I was
A0
like,
Dev.
"Here's the artwork. Here's the story," and it
Yeah.
kind of just made an interactive app for my wife's IP, which is
Yeah.
Honey Bunny Visits. Shout out to Honey Bunny Visits. That's her.
Love it, love it.
Yeah.
Yeah, and it's very timely because I just shipped to AT&T in my last company before I exit. And we basically built Android and iOS apps. And it was grueling. It was so hard getting teams out of India to do this work for us. And then A0 Dev pops up, and I'm like, oh my gosh, I wish I'd had this 6 months back.
And all those developer farms overseas, it's just like they're in trouble, man.
Yes,
But what's interesting is instead of doing these, $4 an hour jobs, they're going to go be able to use Cursor and other apps like A0 and just we're going to have an explosion of software all over the world,
everything
filling
is
every nook and
digital.
cranny.
Yeah,
Has
then
implications for venture capital. I mean, how do you see venture capital unfolding over the next 5 or 10 years as we hit AGI? A lot of people think, 2027, in the next year or two, we have pretty intelligent AGI that you can just deploy as workers inside your organization. And I think I'm already seeing it early stage, ever more increasing amounts of capital efficiency. How do you think this changes venture? I think Mark Andreessen said this recently that venture capital will be one of the last jobs to be automated, which like if Mark thinks that, I'm like, I think he's probably right because he's barely wrong ever. So do you think like we as like solo GPs will just have just a bunch of AI underneath and we'll be running like $1 billion of capital, allocating it to people's YouTube channels and stuff? Like what does venture capital even look like in the future?
Ryan has a job guarantee now because of that.
So I do the podcast. This is my backup,
Oh, I see. That's funny. Yeah, well, I don't think of it as the job. I'm always thinking about, oh my gosh, what's going to happen to the market and what kind of companies am I going to write checks for? Like, I think space travel and all these other things like frontier technologies are going to pick up. It's going to be super exciting for all of us. But absolutely, I think there's a lot more opportunity, not just for solo GPs, but also solo founders to pull it off. Of course, it's really hard to trust a solo founder and write a check as a VC, so I would never recommend it. And I've been a solo founder myself. My second company, I tried to be a solo founder. So I was like, I just know it all. I don't need anybody. But it really de-risks it to have a founding team. For
Tell us more about that. I'd love to hear more about that because you had a co-founder in your first, solo founder second,
I,
and you're like, I'm not doing that again. I want co-founders.
yeah, I had two co-founders on my first, and then we quickly grew into a team of 7. And they were all like friends and, buddies in our 20s, all let's go grab your ex-girlfriend and, I'll go grab my boyfriend. And that's how it started. The second one, I was just at a stage when I had executed so much that I was super confident. And of course, the pandemic brought me to reality that I was like, I'm just so good at marketing, sales, engineering, product. I'm just going to do it all. And that way I don't have to get along with anybody.
I think that's why we get along is we both have kind of this multifaceted background. And, I've done everything, I've never been an engineer, but I can code in Python and train models and stuff. And so I'm pretty technical, but I think it makes me a great kind of generalist investor in B2B software generally, because I've just done all of the roles. I've been a bag carrying salesperson. I've ran BD teams, product, demand gen marketing, biz ops, analytics, like just everything.
Yeah, I think it makes total sense to be a generalist if you want to be a VC. Of course, I didn't do it that way to get here, but all along, it turns out that's what I was, and here I am, and it's a perfect fit. The third time, I did team up with a male co-founder, which I thought was a good advantage because men get into rooms that I don't have access to, and as I get older, I'm shameless about teaming with the right people so that I can get the access I need to succeed. And so that's what I did. I think it was a great decision, and I learned a lot. We're still great friends, and that's the other thing you get when you team up with people, right? You have relationships for life. I have one of my investors, I call him a GP because for all purposes he is. His name is Raymond Lee, and it's a good partnership. He's like a decade younger than me, born and raised in San Francisco, just thinks differently than me. And this thing is going to go beyond my time. So I need younger people to carry this on forward. So it's not like he gets me into rooms that I don't have access to as much as my previous co-founder did. But he is definitely the limbs of the organization, especially the nonprofit effort is massive. And so it's a team, it's teamwork. In the nonprofit, we have about 20 volunteers carrying forth the mission. And they're all like very experienced executives, like founders, CMOs, VPs of product, all of them volunteering their time to run events and mentor people, support the accelerator. So it's almost self-operating at this time. The only thing I do is when there's a venture panel, then I go run it. And so it works really well. That's kind of what's needed. So I think it's important as a founder as well to have co-founders because it de-risks the investment for your venture capitalists, but also for yourself.
Yeah. It's not a hard and fast rule for me, but most of my shutdowns now have been related to either they were either solo founders or they started with a co-founder and one of the co-founder left.
Yeah,
before they had product market fit. Yeah. Now, if you have an insane amount of traction, like it's just growing super fast, and you've put a good team around you, then I'll look past the solo founder thing because like something like 28%. Don't quote me on that, but something like 28% of unicorns are solo founded. So it's not like it can't work. It's just like the odds are stacked against you.
Yeah. See, the thing is, it's a sales job, whether you like it or not. When you're a founder, you're going to sell your vision over and over and over again. You're going to sell to the investors, you're going to sell to employees, you're going to sell to customers. And so the first person that I look for that you have sold to would be who's your team. If you could sell to a couple of your co-founders and give them lesser equity and have them come along with you, that's a good sign that you're able to sell your vision and you can sustain yourself. And you need to be able to get along. It's a team sport, right? And so I look for that. But yeah, you're right. I mean, if you're exceptionally brilliant, you still need a team around you. You need a founding team to be able to carry you forth in order for you to scale and grow. Yeah.
Yeah, I love that. Who's your favorite founder you've backed and why?
Oh, gosh. Can I skip on that, Brian? I have so many of them. It looks like I'm favoring one of them.
So my daughter asked that to me the other day. Who's your favorite? She's 8. I'm like, you're all my favorite. Founder you'd shadow for a week if you could.
My own founders that I've invested in? Or
any founder in the world, historically or present?
I would have loved to have shadowed Jeff Bezos despite, everything. Yeah.
Oh, yeah.
Yeah, I wish I could.
For a week, like what year, what year would you have done?
I would have done when he was running just Amazon.com as a retail site.
Like the late 90s.
Late 90s, yeah. And when it was before he introduced Prime around that time. And I'm sure there are people who are living on this planet ready to talk about it. But I just wish I had been there myself to see how it worked.
Amazon is a crazy company to work for, right? I was there only a year before Microsoft recruited me out of there. And my first week on the job, I'm literally in the room Monday evening, dinner time, like on a Friday, my first week, 5th day on the job, defending my project to Andy Jassy.
Wow.
I'd led AI globally, right? I was launching a really important initiative. And I'm like, Friday at dinner time with Andy Jassy, first week on the job. It's an insane organization. Insane organization.
And you left in a year?
Well, Microsoft gave me an offer I couldn't refuse. So I became my boss's boss over at Microsoft. So I got
there's some of these things about Amazon which I hear which aren't so great about how people don't last in the organization because of how stressful it is. But still, just the founder, if I could just see how he thought about things to actually do what he's done, it's phenomenal.
To build a high functioning organization like that, I mean, just all the leadership principles, it's definitely a breathtaking. I'm glad I got the experience. It was a really good experience. All right, last question. And so really related to the question we were talking about before, but what's your prediction for enterprise AI in the next, 3 to 5 years?
I think enterprise AI has to be rewritten in the next few years. It's going to be rebuilt from scratch in the next few years. You'll find that a lot of companies still are on old legacy systems like PeopleSoft and Salesforce, really hard to migrate them. And now we are moving into a world where AI is driving everything. Just like everything went cloud first, people are moving AI first. But what does it really mean? It means that you're going to have to lose a lot of what you have. I don't think PeopleSoft and these older companies going to innovate as fast as we could as startup founders. And so that's the opportunity. So it's pretty exciting to see what's going to happen. I think it's going to be a much more interconnected world. And there's going to be a lot of replacement of technologies.
Yeah, love that. So glad we got a chance to sit down and talk. Glad you took the dive into venture. I'm sure you'll be very successful. Where can people find you online?
My LinkedIn is my best place to reach me. I'd say 99% of the time I reply.
Love that. Yeah, you'll get to the point where you don't reply anymore. I literally have my assistant going through. I give her like a how to reply to people.
Oh yeah.
and then she takes a first pass.
Well, if you won't share this, I actually use an AI SDR.
Thanks so much for coming on.
Thank you.
All right.